Hey guys, so in today's video, I'm going to be teaching you a super simple ICT Forex trading strategy that is going to help you pass your funded account challenges and catch simple trades exactly like this one, which gave us a nice 1 to 2.5 risk to reward. Now, not only was I able to catch it myself, but so was everybody else inside of the VIP group. As you can see, TP was smashed. Not only that, but I literally called out exactly what was going to happen at the beginning of the day. As you can see, I said I'm looking for EU shorts if we can sweep that high. Once we got that sweep, I identified where we were going to take our entry, and then from there, that's all she wrote. We had a nice TP hit. If you guys want to be able to catch all of these trades that I send out for completely free, then I'd highly recommend you click that link down in the description and get started for completely free. But I'm going to teach you exactly how you can identify and frame up these trades, and it's a super simple concept. So let's jump straight into this video where I'm going to give you a breakdown of the trade that we took and tell you exactly how you're going to take these trades yourself. So first, let's understand exactly what it is that we're looking for. Well, in the Forex markets, you have two key components in whatever direction the market is going in. If we're going upwards, we're going to have a high, a low, a high, and a low. Those are your key components. If we're going bearish, you're going to have low, high, low, high. Exactly the same thing, but these are your key components that move the markets. So for this trading strategy, all we're simply going to do is wait for price to come and take out a key high or a low, and then we're going to look for a reversal. Now, the reason for this is because when anything goes up, it must then come down. So when we put in a high low like this, and then we go ahead and put in a higher high, we then have to come back down to put in a higher low, right? So again, the key components are there: low, high, low, high, low. So that is the simple infrastructure that we're going to be following, where as soon as price goes ahead and breaks a high, we're then going to look for a reversal after it's put in the high to come down and put in a low. And then that's it. The trend is then going to continue so long as you are in a pro trend direction. So now on the flip side, if you were looking at taking a short position, you would simply wait for price to come down and break a low. Now you would look for a reversal, which you can then take to the high, and then price are going to continue putting in low, high, low, high. Super simple, super easy. So let me show you exactly how we found and framed up this trade where we were able to make a profit of 1 to 2.5 risk to reward. So let's clear this off the chart, and what we're going to do is we're going to come up to the 4 hourly time frame. Now on the 4 hourly time frame, what can we see? Well, price is very clearly bullish, right? We're putting in low, high, low, high, low, high, right? So when we came to the charts in the morning, price had just put in a low. So this is where we were at when price had opened on the chart. So now that we can see that we've put in a low, what do we anticipate next? We're going to put in a high, and then once we see that high has been put in, we're then going to look for a reversal for price to come back down to put in a low. So based off of that methodology, what we're going to do is wait for price to take out the high, which I've marked out with this line right here. Once price goes ahead and breaks that high and we get a brand new high just like this one, what we're going to do is drop down to the 5-minute time frame, because this now becomes our execution time frame. Now on the execution time frame, what we're going to do is the exact same fractal thing we're doing on the higher time frame, but on the lower time frame. So in order for us to take an execution, in order for us to enter into the market, what we want to see is price putting in a series of highs and lows, and then we want to see price break the low and invalidate the bullish trend. So now we've gone from putting in high, low, high, low, high to putting in a low, which is then going to put in a high in the opposite direction and continue lower. This is called a market structure shift, and this is what indicates to us that the markets have now flipped from bullish to bearish. And once the market tells us that it wants to go lower, we can then start looking to enter into the market because it's given us the insight that it wants to go lower. So then we can identify key areas such as a fair value gap, which is displacement in the market, or an order block, which then can be our catalyst for price to then continue lower from there. So it's nice and simple. We're again following the exact same thing we're doing on the higher time frame. So after we've swept that high, as I said inside of the VIP group, once we sweep the high, we can start looking for shorts. We're going to drop down to the 5-minute, and now again we're going to identify what is structure doing. So as we can see, we've put in a low, a high, a low, and a high. So at the moment, the market is still bullish and it hasn't indicated to us that it wants to go lower. So what we need is the market to essentially come and break below this low right here, because if it does that, it has now told us that it wants to go lower. So then we can start looking for a high, which is going to be our entry, maybe at a fair value gap, maybe at an order block. And then from there, we're going to look to take price lower, right? So it's nice and simple. We're just waiting for price to come and give us a break of this low right here. Until that happens, we're simply just going to sit on our hands and we're not going to do anything because the market hasn't told us what it wants to do. So let's play price on, and then we can see that right there, the market goes ahead and breaks to the downside. So now that we've got the indication that the markets want to go lower, we can now identify the fair value gap or the order block which caused that market structure shift. And a fair value gap is just simply inefficiency in the market. That means in this leg of price right here, only selling positions were offered and no buying positions were offered. This has left the market in an unequal balance because for every reaction, there has to be an equal and opposite reaction. Because we haven't got that right here, it is highly likely that price is going to want to come up to close out this fair value gap, to close out this inefficiency, so it can rebalance that price, it can rebalance that area, and then continue lower from there. So we're going to simply take our entry at the open of that fair value gap with our stops just above that high, and then we always target the lowest hanging fruit. And when I say the lowest hanging fruit, exactly the same thing that we're doing on the higher time frames, where we're waiting for price to sweep a key high or a low. We're going to do the same thing on the lower time frame. That, as we can see, we've got this super key low level right here. Now, the reason for that is because this is our high, this is our low, and this is our high. So now if price comes and swoops below this low, it is highly likely that we are then going to continue higher from there. Exactly the same as the higher time frames. So based off of that methodology, we're going to put our take profit right there. And once we've done all of that, once we've done all of the hard work, this is where I've now sent the trade inside the VIP group. And I've told everyone that we're going to be entering our position right here on this fair value gap with the limit, the numbers, everything that you need, and a screenshot to make sure everyone understands where we're at. So now we sit on our hands, we wait for price to come and tap us in. And then from there, what happens? We go straight to our take profit. And where does price stop? It sweeps this low right here, exactly as we done on the higher time frames. And then check this out. Price then continues in an upward direction. Did you see how clean that exit was? This is why your exit is just as important as your entry, because you need to know when to get out of the market. Because if you held this position to go lower, you would have been break even. Or worse, you would have been stop lossed, right? You have to understand when to exit as well as when to enter. Now, if you do want to get access to these trades that I provide for completely free, click that link down in the description. You can join today, join the community, get access to my trades completely free, no hold barred, right? But if you want to learn how to trade yourself, watch these videos. They're going to give you great insight into exactly what you need to do. So I hope you guys were able to understand exactly how to identify key levels in the market. Once they're swept, you then simply wait for the markets to indicate that they want to go in your intended direction. You wait for a confirmation, and once you've got that confirmation, you can then safely enter into the markets. And then once everything is said and done, you simply just wait for either a stop loss or a take profit. It's one or the other, and whatever happens, we live to trade another day. It's as simple as that. So I hope you guys took away some great valuable knowledge from this trade that we've done today. And if you did, don't forget to leave a like, comment, and subscribe, because it does go an extremely long way into helping this channel grow, and also for me to be able to provide all of this incredibly free content just for you. So on that note, I hope you guys enjoyed this video, and I'll catch you guys in the next video.